What if I told you the internet almost died before it ever had a chance to live? This is the story of how the dot-com bubble erased nearly $5 trillion, destroyed thousands of startups, and, by pure accident, cleared the path for Amazon, Google, and the digital world you use every day. Back in the ancient, mystical year of 1995, a terrifying sound echoed through living rooms across America. That sound was the internet, logging on. Slowly, painfully, magically. Everyone agreed on one thing. This was going to change the world. "Is the phone line broken?" Mom asked. "Or is Jimmy summoning demons again?" "No, Mom, I'm downloading a picture of a cat wearing sunglasses. It'll only take 11 more minutes." The internet didn't make sense, but it didn't need to. It blinked, it buzzed, it screamed like a haunted fax machine. Nobody really understood what it was, but everyone knew it was the future. Mysterious, glitchy, glowing, overflowing with potential. Early pioneers like AOL, Yahoo, and Netscape carved the first trails. The internet was the Wild West. Fewer cowboys, more nerds in socks and sandals. You waited 5 minutes for a dancing baby GIF, and you loved every second of it. Being online made you feel like a tech prophet. Even if you had no idea what JavaScript was, you were convinced you were building the next industrial revolution. Then, Wall Street showed up. The moment investors heard the phrase online bookstore, they reacted like a dog hearing a chip bag open. Billions poured into anything ending with .com. What does the company do? It's called toiletseater.com. It uses AI to predict when public restrooms will be vacant. Brilliant! Here's $200 million. Suddenly, every startup was a golden ticket to financial Valhalla. All you needed was a terrible idea, a logo made in Microsoft Paint, and a founder who could say first mover advantage or disruptive 3 times per pitch. Congratulations, you now had a $100 million valuation. Take Pets.com, famous for its sock puppet mascot and for burning $300 million selling 50-pound bags of dog food at a loss. Investors responded by giving them more money. eToys burned cash like a Bond villain hosting a barbecue. Webvan promised military-grade grocery delivery and collapsed like an overcooked souffle. Nobody blinked. The Nasdaq quadrupled. IPOs became celebrity weddings. The media couldn't get enough. Financial TV turned into tech gospel. Welcome back to Money Madness. Today's hot tip, a website that mails socks to dogs. It's going to revolutionize paw parody. By 1999, the hype reached final boss levels. Super Bowl ads promoted companies no one had heard of. Some had no product at all. One ad simply said, "Our website launches in March. Please clap." And people did. No one was investing in businesses anymore. They were investing in vibes. Stock prices soared. Everyone was rich on paper. Teenagers day traded from their bedrooms. Your crystal collecting aunt bought tech stocks. Even your dentist was coding JavaScript between cleanings, hoping to IPO. Between 1998 and 2000, more than 12,000 dot-coms were born. Their offices looked like daycare centers for billionaires. Ping pong tables, nap pods, cereal bars, scooters. If your office looked ridiculous, you were the next Microsoft. Profits? No one asked. Revenue? A myth. Burn rate? Glorious. It wasn't about making money, it was about scaling. Scaling to what? Nobody knew, but that didn't stop anyone. And everywhere, one phrase echoed through boardrooms and newsrooms alike. This time, it's different. It wasn't. But no one wanted to hear that, because this wasn't just a gold rush, it was a delusion wrapped in optimism. Everyone believed the internet would change everything. And it would, just not like this. Somewhere in quiet garages, a few focused builders, Bezos, Brin, Page, Musk, watched the chaos unfold. They knew the real internet hadn't arrived yet. The hype train was racing to a cliff, and they were already laying tracks for what came next. The crash, when reality slapped the future. March 10th, 2000. The Nasdaq hit 5,048. Champagne flowed, office chairs rolled. It felt like the beginning of a new era. The internet seemed unstoppable. This isn't a bubble, people said. This is the future happening in real time. Then, quietly, things started breaking. A few companies missed earnings. Suddenly, forbidden questions returned. What's your revenue? How many customers do you have? Are you profitable? Webvan reported catastrophic losses after spending over $1 billion. Pets.com admitted it was bleeding cash with no exit in sight. Confidence turned to doubt. Doubt turned to doubt. The market slid. Slowly, at first. Then came the sell-off. Over the next 2 years, the Nasdaq collapsed 78%, falling from 5,048 to 1114. More than $1.7 trillion vanished. It wasn't a dip, it was an extinction event. Over half of all dot-coms shut down. Some were sold for scraps, others just disappeared. It wasn't just companies that died, it was an entire belief system. Amazon lost 95% of its value. Yahoo cratered. eBay barely survived, kept alive by Beanie Babies and used electronics. For a brief, surreal moment, the most stable site in Silicon Valley was Neopets. Offices emptied. Stock options became worthless. Foosball tables ended up in dumpsters. Former superstar CEOs rebranded as cautionary tales, giving talks titled How to Lose Everything. The media flipped instantly. The internet wasn't the future anymore, it was tulip mania. Anything with .com in the name became radioactive. Students switched majors. Computer science enrollment dropped over 30%. Why learn to code if it just leads to layoffs? The dream was over. Or so it seemed. The survival. Who didn't die, and why? While most startups collapsed, a few didn't panic. They didn't posture. They just kept building. Amazon looked doomed in 2001. Its stock fell from $17 to $6. Headlines called it Amazon.com bomb. But Bezos didn't flinch. He said, "We sell books, not dreams, not vibes." He cut costs, killed distractions, focused relentlessly on execution. Faster delivery, lower prices, better logistics. Meanwhile, Google quietly refined search in a garage. No ads, no hype, just code. AdWords started as a side project to keep the lights on. eBay kept doing one thing well, connecting people. What separated survivors from casualties? Profitability. They had customers, revenue, real demand. They grew after proving value, not before. And the greatest irony of all? The failed companies left behind something priceless. Infrastructure. Servers, fiber optic cables, data centers, talent. Like Roman roads after an empire fell, the foundation remained. By 2003, builders returned. Facebook, YouTube, Twitter. No launch parties, no hype, just platforms. Then, in 2007, Steve Jobs held up a small glass rectangle, and the internet stopped being a place you visited. It became something you lived inside. The internet didn't die in 2000. It rebooted, and then it reshaped the world.